Well, the last thing I want to talk about is, one of the guys that we follow, Dave Rosenberg, economist. I would say he's kind of a perma bear. Would you say that or no? I always felt like he was a perma bear for many years. He always thought the market was going to come down, and I stopped following him. But he's very, very smart when it comes to inflationary data and reporting data. But there's a difference between being smart reporting data and understanding and making money off of it. There's a massive, massive, massive difference between that. I think, for me, David Tepper is the greatest in the world that does that. He could interpret data and know exactly how to make money. I see so many guys and economists interpret data, and he was completely, based on a totally negative on stocks. For a very long time.
Use it to kind of back up whatever argument you already had.
Yeah, exactly. It's like someone saying, Tesla's overvalued at 200, which it was, 300, 400, 500, 600, 700. Yeah, you're right. If you look at every metric, it's overvalued, but the stock is up 300% right in your face. So it's how do you make money off of that? And I never got that from him, but he's someone I follow, and he's coming out saying with a lot of good statistics saying that this inflation, and he's agreeing with the Fed, that it's going to be transitory. It's going to be brief, this massive inflation. So what are your thoughts on that?
Yeah, this piece jumped out at me. I thought this was fantastic. He wrote a piece with Macro Voices, inflationary will be transitory, and then Zero Hedge, which is a wonderful libertarian financial website, ran it with a quote that says, "A whole bunch of people are really, really wrong about inflation." And I'm paraphrasing here, of course, because Frank and I have been talking on the podcast a lot about inflation. And to keep it simple, what he's explaining is that it's more of a pendulum swinging because of he expects more government policies to kind of negate or draw back. So what we've been talking about for several weeks and warning investors and also positioning portfolios to benefit from this, higher prices across the board, is that when you inject money into the economy, when you put it, just like the government is putting trillions, world governments around, but our government, trillions and trillions of dollars into the hands of the consumers like us running around the economy, that causes prices to go up. Now, on September 6th, Frank, what happens? The unemployment extra benefits supposedly run out from the government level. That's a $300 a week bonus right now. Over 20 states, I believe now, are doing away with that, mostly Republican, if not all Republican, to try to encourage people to go back to work. So what Rosenberg is saying is, hey, we're getting a lot of statistics right now that are showing inflation, no doubt. However, he thinks that because of dramatic increases in exports from Korea and Taiwan, which are critical sources for semiconductors, and he points to how container ships are, quote, filled to the brim and in holding patterns. So think of airplanes, Frank. When you look out the window and you're circling your airport and you see 3 other airplanes, everybody's waiting in line. Well, picture that on the ocean, because in LA and Long Beach, which are 2 of the busiest ports in our country, you have container ships filled to the brim, like he said. So this whole supply crunch is happening right now. Is it going away tomorrow or next quarter? No, but he expects it. Oh, we're getting spied on.
That was actually serious. I'm going to keep that. I'm not. We really don't edit anything in these podcasts, but that's an interesting question.
Hopefully our ratings are going up through the roof because we're getting spied on. So he expects basically the supply chain to kind of level out, and as we get towards the end of the year, if the government does stop, now there's a whole bunch of options that could happen, because I personally think that you're going to see headlines and arguments made in the government about extending those benefits or universal basic income or something to keep injecting money into the hands of the people. I don't think that should happen, but I think that that's going to be a conversation. However, like Rosenberg points to, if you have reopening of the economies and you have less money going into the hands from the government, that short term will show a balance of inflation. And I don't think the Fed can control inflation. I know that they can't if you just pay attention to history. However, they can influence it over a short-term time period. And remember, Frank, we've talked about this a lot. What governments look at and view inflation as and what the reality of inflation is are 2 totally different things. So if they can pull back adding money to the economy at the same time people are going back to work, if you pull money out of the economy, what happens? If you quit giving people free money, demand is going to go down because they're going to have less money to spend. That's not rocket science. So you pull some money out of the economy or stop putting money into the economy at the rate you are. You couple that with people going back to work and economies opening up, that could level off some of that. And I think that's a great point. What would happen if the market gets wind of solid data like that? Stocks could continue to move higher and higher to new all-time highs.
You know what? I'm just writing down a point here because I'm listening to you. And for me, I always love listening to people who have a different opinion than me. And here's why, and I respect, but here's why he's dead wrong. Okay, I'm going to make it simple for you. And, you know, I felt like he's been dead wrong for a while. And again, I love the statistics. I love what he's saying, right? Because he said it's probably too much to, this is what he tweets, it's probably too much to expect the talking heads on TV to make a differentiation between a pandemic, reopening price level adjustment, and lasting inflation. And he says treasuries are selling off in the FOMC minutes without realizing that since that meeting, we have seen duds in the payroll, retail sales, and housing data. Somehow, lost in the inflation hype is a city economic surprise index sliding to 11-month lows. Okay, so when I take everything, and even what you said, right, when you're like, hey, you're going to take this, you're not going to pay people to free money anymore, right? So there's less money going into the market. Stop putting money into the market. Why is that stopping? You're just talking about one small facet of the market where, okay, you're not going to pay these people anymore. Big deal. You know what? They're going to go back to work. And how are they going back to work? All these companies are paying them incentives and raising their pay, right? So that's more money that's going to be made in their pocket, right, that they're going to spend. You're talking about the supply issues are going to go away. They're not going to go away to 2022 at least. The reason why we have that massive imbalance is because there's not enough goods on the market. Everybody wants to buy stuff, right? So you're looking you're looking at retail sales. Why was it a dud? Go to Best Buy. There's nothing on the shelves. Yeah. People aren't buying anything because there's nothing there. I would have bought a car last month when I started looking. I couldn't buy a car. Now I have to get a used car, ship in here, and then I got to go pick it up in a couple of days. People are trying to buy and they can't. So you're looking at why home values are going through the roof still, up tremendously. And I think it went up like 17% year over year, which is insane. But why is that number latest housing data? Because, you know, housing prices are going higher and higher and higher and higher and higher. They keep going higher, right? So of course, you know, you're seeing a little demand come off the market just a little bit, but yeah, it's still pretty high. But when I look at what he's saying, where he says, you know, less money going into the market, I can't see that argument. I mean, there's more money going into the market as long as interest rates stay low, which the Fed said they're going to do. They're going to continue to buy bonds, so that money's staying to the market. And the money he's talking about where, we're getting rid of unemployment benefits, that's going to force these people to go back to work. And they're going to be making a lot of money going back to work, more money than they made when they didn't. So
in a lot of cases, yeah.
In a lot of cases, because you're seeing a massive labor shortage. And then what's going to happen? I mean, you're looking at people trying to buy, they're still trying to buy stuff, but they can't buy stuff because it's 3 months, 6 months, 9 months. I ordered a mattress. I need a mattress. I have the worst mattress ever. I ordered it a month and a half ago, and they said it's going to take 2 months. I just emailed them and said, hey, could you give me an update? Because I ordered a Peloton. It took like 3 months, but every week they're like, hey, this is what's going on. They let me know. They haven't even answered my email, nothing. I'm like, you know, I bought a really good bed because I need it because I have back problems and this bed is terrible, but it's, you know, we're still waiting for it and nothing. I'm not even getting. So this is not going away anytime soon. And to think, well, hey, money's coming out of the market now. And wait, the unemployment rate went higher. It went higher because people are home right now and they're getting paid more money than to work. But what's going to happen? You're going to remove those benefits. Now they're going to go back to work and they're going to make higher wages than they did when they were working. It's good. Definitely going to be, everybody is raising prices tremendously across the board. Every company, guys. I track this stuff. If you look at any single company, listen to any conference call, every McDonald's, Chipotle, everybody, Coca-Cola, everybody's raising prices. You know it. You see it everywhere. So the fact that people think this is going to be transitory, I don't get it. I don't buy that argument. I'm sorry. I mean, look, he's brilliant. He's a brilliant economist, and I love seeing the other side, right, or a different opinion, and he could end up being right. If he's right, this market's going to soar because you get all this money coming into the market. People are more richer today than they've ever been. People are going to spend money on goods. Yes, I know there's a massive gap, but we're talking about the people who spend money here, right? This is about the economy. You're going to see more and more people buying stuff. You're seeing it right now. They're buying houses. They're buying everything. You're seeing bars crowded. Everything's crowded. People are spending money. That is not going away anytime soon. And the fact that the Fed is like, hey, you know what? Unemployment rate went up, which is a surprise. So, you know what? Since that's our mandate now, it's not inflation anymore, right? Well above their inflationary target. It's getting that unemployment rate to pre-COVID levels. And when I look at that, that's not happening. That's not happening. It's not going to happen. There's just too many people at home, too many people that that got the taste of staying home, they're doing other jobs from home. You're not going to get that unemployment rate back down to 3.5%, whatever, 3.7%, whatever it was. So when I look at his argument, yes, I'm expecting retail sales to be a dud because you can't buy anything right now. It's very difficult to buy stuff. Housing data, of course, you're seeing a home price go higher and higher and higher. And you're saying, well, that's going to result in a slowdown. Is it? Because if interest rates stay low, which you're saying they're probably going to stay low, and they're still kind of low, and mortgage rates are low. You're going to continue to see people buying homes and assets. I mean, you're still seeing assets across the board go higher, even in stocks. Now they're coming back, right? So, yeah, and he's talking about the payroll. Again, all those arguments, I just don't see. Could I be wrong? Absolutely. And he could be right. And this could be transitory. I just don't buy that argument. And I'll be honest with you, I hope he's right, Daniel. Because if he's right, people are going to make an absolute fortune, especially in their portfolios, especially in the markets. You're going to see technology companies bounce back tremendously. You're going to see profits surge. It means that all this pricing power was easily passed off, and these companies are going to generate profits beyond belief, right? Even though we have tax cuts coming up, for corporate taxes. But if he is right and it's transitory, then, and it's going to be brief, I don't know what brief is, by the way. I wish he defined it, because this year, forget it. The prices are going to go through the roof this year. I mean, this supply chain and chip shortage is not going away anytime soon. I just, again, I don't buy it. I hope he's right, because if he's not right, we're going to be in a recession next year. We're going to be forced to raise rates if we see inflation go out of control. And right now, that's a very real possibility where interest rates are, and the fact that the Fed's not taking their foot off the pedal. That's just my opinion. Yeah, I could be wrong. Again, I hope I'm wrong, because it's going to hurt a lot of people. Right.
I mean, the big takeaway here is it all comes down to timing and perception. So I agree with both of you guys. What you're saying, people are going to go back to work.
You can't. You got to agree.
Well, the easy answer is you don't have to take a stance here, because you can make money. I mean, the easy answer is be diversified. So if you're diversified, you're fine. You're going to have some things bounce around. I don't need to take a side, because you don't want to load up. I don't think you should anyway, and I'm not going to load up on one side or the other. Timing and perception, because to your point, people go on unemployment benefits, have to go out back to work. Let's say they're making more money. That doesn't happen overnight. And so if that takes a quarter or 2 quarters to kind of get into place, that's going to reflect in those statistics. And that's my point. So as long as the government's looking at stats, and like Rick Santelli made a great point a couple weeks ago, once you get to that year-over-year point, if it's not outrageous, then you really have to pay attention, because the new normal for us as consumers in reality, our prices are going higher, no doubt. But if that doesn't change the dynamic of the Fed actions, that's completely different than what could happen in the stock market prices. So, and to point to a realistic thing on that, Cracker Barrel, Frank, do you like Cracker Barrel?
Yes.
I really like
Sometimes I like Cracker Barrel, right? I mean, it's a bad...
Get off the fence. What do you mean sometimes? You either like it or you don't.
You know why I don't like it? Because I'm getting in very, very good shape now, and you can see just by looking around that crowd who eats there, and it's good, and you get big portions, and it is nice.
Hey,
and
moderation, my friend. Just because other people may or may not do it doesn't mean you
How could you eat one pancake if you go there for breakfast?
You eat one stack.
One stack. Yeah. It's a lot of...
Well, you don't do it every day. Anyway, they're delicious. Their biscuits are good too, and their coffee's good.
Biscuits, yeah.
Anyway, I like the atmosphere. I'm not a knick-knack. I don't buy all the crap, but it's fun to look around and see what that kind of stuff is. Back to this. They're a strong brand, so you always ought to follow their earnings, because, and I believe, well, I won't even get into that. The big takeaway here is they saw 2.8% step up in prices in Q3. They expect 5% more increases in commodity in Q4 due to pork prices moving higher. They, Cracker Barrel, are going to increase prices by another 3% in Q4. The bump will not be enough to offset rising prices. So yes, they have pricing power, but they're not going to raise prices so much to offset all of theirs. So you have to look at margins. They can cut costs everywhere else. To your point, Cracker Barrel has already raised prices. They're going to raise prices again in Q4 by 3%. Let's say everybody's right and you get these year-over-year or these inflations that look temporary. Is Cracker Barrel going to lower prices by 3% Q1 or Q2 of next year?
No. Doubtful. Ever lowers prices.
Very rarely.
Yeah.
So that's the reality. That's what the toughest part is. You're going to look at data that's going to scream inflation. Reality is, but how is that going to dictate the stock price and all that kind of stuff? So that's something to take away. I hope that helps and kind of backs up our points, not makes us look like we're on the fence. But that's just the reality of real private companies, publicly traded companies out there working versus the quote unquote smartest guys in the rooms that are looking at